Hello, everyone. Thank you so much for joining us for another weekly wrap-up. My name is Jeremy Kronemeyer, Operations Manager for Wickham Financial Group, and I have Graham Wickham here, President and CEO of Wickham Financial and Insurance Services. Graham, what happened in the markets last week?
Yeah, thanks, Jeremy. Thanks for our listeners jumping on the call. And, we just hope that everyone had a great, safe Thanksgiving holiday week, took some time to be with your loved ones, friends, and family. So thanks for jumping also on this call. We had a really strong week. I mean, holiday shortened week, but we saw the Nasdaq up about 5%. The Russell 2000, remember that's that small cap area, up 5.5%, and the S&P 500 up about 3.7%, and then the Dow followed. What were the lead sectors? We saw consumer discretionary up about just under 5%, technology up about 4.8%, and we saw gold futures up about 4.5%, followed by oil up 2.5%. Keep in mind, and when we looked at it as a whole, it was really an everything rally last week to kind of offset that pullback that we had in the previous weeks. If we look at rates and Fed policy, we saw Treasury yields easing a bit with the odds of a December rate cut rising above an 85% chance that we're going to get a rate cut from the Fed, and we're moving into their last meeting for the year here. We saw Fed official Waller and Williams boasting support for lowering rates, and that's what the market's looking for, by the way. No clear FOMC consensus, but we're looking at the 9th through the 10th meeting. It'll be pretty pivotal. I think the market's going to take its cues on what happens at that particular point. If we look at economic data, we'll look at the labor market softening. We saw ADP report that came out, private firm shedding about 13.5 thousand jobs, 13,500 jobs, I'll get this right, for the week. That was up from about 2,500, so a bit more than what we were thinking. Consumer confidence fell to about 88.7 from 95.5. September retail sales, that was up about 0.2. That was below expectation. In the Beige Book, so we're looking at economic activity, that was remained pretty solid, even though I know there's pockets, there's areas where everyone feels that things aren't that great. Well, maybe they're not as good, but we're still pretty strong from an economic activity standpoint, and the Atlanta Fed is still forecasting Q3 GDP at somewhere around 3.9%. Do also keep in mind the Atlanta Fed usually comes out a little bit stronger than everyone else, but we're looking at that being reported December 23rd. Housing market, we saw 85,000. So I want everyone to be mindful of how I'm going to say this. 85,000 sellers pulled homes off the market in September. That was up 28% year over year. Why are they pulling homes? They're taking them out of the market to be sold. They're sitting on the market longer than average. Maybe they're not getting the prices that they want. We're seeing reduced prices. So they're pulling them off, maybe letting the market digest a little bit, and then hopefully they'll be putting them back on. That's usually not a super solid sign. Just putting that out there. Inflation, September PPI, that rose about 0.3 month over month, about 2.7% year over year. So we still have inflation pretty tame, even though we have pockets that might be higher. Overall, pretty tame. Global developments, if we look at the UK, we saw the pound, the gilt rose after Reeve's 2026 budget. We saw the tax hikes may slow some growth. Germany's inflation accelerated. Retail sales fell about 0.3% month over month. In Japan's Tokyo core CPI, that came in at about 2.8% year over year. We're looking at some wage negotiations, pointing to maybe some solid payroll hikes, maybe boosting rate hike expectations over in Japan. Now, we're coming into the week. We're going to be looking at some Fed speculation. What is the Federal Reserve going to do? Who is the Fed going to, who is the White House looking to replace Chairman Powell with? Well, it looks like it's going to be, at least from the White House, NEC Director Hassett. He's perceived as a dove when it comes to inflation, meaning he wants interest rates to come down, which can be good. It can potentially impact the dollar. So keep in mind, interest rates coming down is going to help borrowing costs, maybe spur growth. That can weaken the U.S. dollar, can support gold and some digital assets. So we need to be mindful of how those markets might react if we get the new Fed chairman in there with a little more dovish stance, lowering interest rates. We are still expecting the Fed to lower interest rates, so I do want to put that out there. That was on my previous statement with some comments for this week. Look at some key U.S. data releases. We've got job data delays with JOLT and the non-farm payroll, so still having some delays out there with the government shutdown. Some available reports, we'll get the ADP private payroll, some challenger job cut numbers, core PCE price index. So we're looking at for September, that's due out on Friday. We're just looking at consumer sentiment, inflation expectations, just kind of what are the cues that the Fed, the Federal Open Market Committee can vote on to lead them either to stand pat, raise rates, or lower. Again, more stand pat to lower, not expecting any rising rates here. Global events, we got the weekend release of some China PMI numbers, some OPEC meeting coming out. Got the ongoing geopolitical war debate, I guess, if you might, between the Ukraine and Russia. Hopefully those negotiations can come through in a positive manner. Overseas data, the Eurozone CPI, the retail sales, Germany's manufacturing numbers. We'll kind of wrap things up with Australian GDP. Jeremy?
Thank you, Graham. Well, I had a question for you. Going into that last Fed meeting of the year next week, how do you see the market reacting going into that meeting?
Well, I think with 85% probability of a rate cut, I think this market is expecting a rate cut. If they don't get a rate cut, I think there'll be an issue in the market. You know, there could be a digestion of this recent rally that we had off that very small pullback. I think it amounted to at 1.5% or almost 5% for the S&P. I think the Nasdaq was down a little bit more. And then again, we got that rally back in the shortened week last week. So I think the market would be quite disappointed. Do they need to be aggressively lowering rates? I don't know if they do, but not necessarily they want my opinion. But I think the market is definitely looking for some lower rates. And if they don't get it, I think it'll be quite disappointing.
Gotcha. Well, Graham, we always appreciate the information, expertise, and thank you to all our listeners always checking in with us every single week. And we look forward to seeing you next time. Have a great day.
Take care.